Good morning, ladies and gentlemen, and welcome to this session on the tax landscape from the eyes of digital businesses. Firstly, let me thank FITIS for inviting me to moderate this session. My name is Sulaiman Nishta, and I am a partner of Ernst & Young, and I will be your moderator for this session. To my right, I have Mr. Abbas Kamardeen, who is the chairman of FITIS and managing director of the Debug group of companies. And to his right, we have Mr. A.M. Nafeel, who is the Commissioner Tax Policy of the Inland Revenue Department, who are both going to join me in the discussion today on dissecting the tax landscape and related areas. So this session will be broken up into three parts. Basically, we will be going into the existing tax landscape for IT and digital and enabled services. What are the taxes that are in place? What are the concessions given at the moment? We will then move on to the concessions given for large projects in this area that came up in the budget last year. And then, of course, the new global trends in digital taxation, which is a new concept that has come up. Sri Lanka is yet to adopt it, but we will go into its pros and cons, and whether this should be adopted or not will be a point of discussion today. So just to summarize the current landscape before we move into a discussion, is that prior to this government taking over, most companies, including IT-enabled and digital companies, were taxed from four angles. There was a direct tax on profit, that was income tax. And then you had three taxes that were imposed on revenue. That was VAT, NBT, and ESC, right? So when this government came, their policy was to create an IT hub in Sri Lanka and thereby recognize IT and digital companies. And thereby they came up with a blanket statement saying that all taxes to IT and IT-enabled services, they termed it that, will be exempt from all taxes. And the word used was all taxes, right? And I think they have, if you look at those four taxes, they have kept that policy in place by the recent amendments that have been proposed. So they have done away with NBT, that is for all companies. ESC has been done away with. And now for specifically IT and IT-enabled services, they have made specific exemptions for income tax and VAT, right? So what this entails in terms of exemption, who actually falls in is currently being finalized by the department, because that has to be actually defined by the minister himself, and that definition is being deliberated at the moment with the Department of Revenue and the industry. So if I just move to Mr. Nafeel first in terms of a question. Could you explain to us the thinking behind the new tax incentives and why the government has chosen to give such significant conditions from the sector, being in the revenue and your objective being to collect more tax? What do you think the government is trying to achieve?
Yeah, thank you, Mr. Sulaiman. Good morning everybody, audience. In fact, I am from the Inland Revenue Department. My prime objective of the department is to collect revenue to the government. So that is our core business. So giving exemption is somewhat contrary to the IRD objectives. So because we are the people should look after the government coffers by providing sufficient revenue, collecting from the general public and give to the treasury. This sort of exemption is given with a specific objective, because you have to go back little bit 2019 prior to the presidential election. In the election manifesto of the Honorable His Excellency of Gotabaya Rajapaksa, in his manifesto it stated to make the country smart. It should be the smart nation. That means it is a technology-based society is the prime objective of the one of the prime objective of the president.
Right.
So, because the 21st century is the very challenging century, so we have to compete with other nations. So, even to market our product, village product to the international market, the IT sector is very essential. Without that IT sector, it can't be marketed, right? So, it is, since it is a very essential, the president thought this should be one of the prime objective, so for which a government should give all the protections and the concessions in order to boom up this industry. So, under that objective, the first the work plan of this objective is to establish Sri Lanka as a global innovation hub, right? So, for that we have to maximize the use of Internet of Things and artificial intelligence, biotechnology and robotics, augmented reality, cloud computing, nanotechnology, it's going so on. And also the second plan is to setting up of a citizen-centric digital government. That means, so even for, we'll take for an example the Inland Revenue Department. Few years back, if you want to open a tax file, you have to walk into the Inland Revenue and fill number of the application forms, and you have sometimes they may ask your bank detail as well. And it is a huge process. It was a huge process on those days. Nowadays, IRD also entered into a sophisticated, modern revenue administration management information system. By using that system, you can make your application where you are in the world, right? You make an application, you can get your TIN number within within 3 hours at minimum, or based on the availability of the staff, you can at least you can get within 3 days,
Right.
right? No need to even to come to the office. So this sort of facility to be given by the old government sector, that is what this setting up of a citizen-centric digital government is essential. And also if you take this RMV, Persons Registration Department and the Passport Office, if we can make it, then no need to be in the queue, right? So this industry gives lot of facilities to the general public. If this industry boom or given protection to grow up, that is the basic idea of giving a concession. In addition to that, creating a digitally inclusive Sri Lanka, that is also another part of it, to make the nation smart nation, and also promoting the IT entrepreneurship, means who are engaging in the IT hardware business and the IT software business and the BPO business process outsourcing and the knowledge process outsourcing.
So we come to that in detail, Mr. Nafil, the specific areas. Next, coming to Abbas, could you give us a status of the Sri Lanka IT and digital industry and the opportunities and threats you see which the government should be aware of, right? So that we can really go to this objective in order to maneuver policy, because now we are still a bit liquid in sense of policy, in a way that the industry can be encouraged, protected adequately.
Sure. Thanks, Sulaiman. So, in a sense, of course, Mr. Nafil articulated well the real reasoning and the justification behind driving the ICT industry or the digital industry forward, and he explained the reasons and the benefits why. So let me just go more in depth into the industry in itself. So the ICT industry has two components on an external point of view. One is the component of the digital economy element of it. That is what I think a lot of what Mr. Nafil covered in terms of what is the benefits that could be gained from a very strong digital economy has been discussed a lot over these last few sessions that we have had on Internet Day.
Right.
And it is very clear that I think with the leadership of HE that it has been very well understood that it's important that Sri Lanka moves into a very strong and vibrant digital economy. Now that element is one, and the other element is of course the export revenue or the foreign exchange revenue that could be generated from this industry by providing products and services to foreign nations from the ICT sector. So I think the second option of it has been well understood for a long period of time, and it is clear a lot of benefits have been forwarded to this sector, and I think the sector has thrived quite well. We are at about $1.2 billion in terms of foreign exchange earnings or revenue, foreign revenue in that has been coming in, and the target is to get up to 3 billion in the next couple of years.
Right.
Now that plan is well underway, but even within that, I think there's a big challenge that the industry has to face. That is that currently, a vast majority, I would say 90% plus of the sector is actually exports are linked to services. Right? That's basically where we provide back office operations or services to various other ICT companies. Now, the challenge is always going to be is that like most of the other sectors such as apparel, the minute our labor costs keep going up as we move towards a middle income nation, how competitive are we going to remain, and how much of that business at the bottom rung would drop off? So it's important that we move up the pyramid. And one of the key elements of moving up the pyramid is for some part of the industry to move up from providing basic services of software engineering or quality assurance, etc., to actually moving into intellectual property ownership and promoting intellectual property internationally. So that element, of course, in any policy decision, I think that has to be considered very seriously, because otherwise the whole policy might be very short-termism in some sense, and it could affect us in the long run as we grow and as we become a more middle-income nation. On the digital economy element of it, I'm glad that we have finally understood the importance of driving Sri Lanka towards a digital economy, because there is a saying that if any country that does not have a sustainable, evolving digital policy for the people, for the companies and for the government, could become a failed state. Right?
Yeah, given the competition now, right?
That's how important the digital economy is. And I'm very grateful that from HE, the president, to the leadership have understood this. And that is where all these things are coming up from, because if the country does not evolve into digital, right, we may not be relevant anymore as a country. And that's a very, very very dangerous situation, I would say, in some sense. So in line with that, I think a lot of these tax policies, etc., are very valid and very relevant in that sense for the industry.
Sure. Mr. Nafil, coming back to you, so this whole sweeping tax reform is very exciting indeed. Can you just explain a little more in detail what these incentives given, I think primarily for income tax and VAT, what the departments and the ministry's view is at the moment?
Yeah, initial as the outset, as you said, the zero rate tax policy for all IT sector,
Correct.
whatever the service, that is the whole thing. But we'll see the prior to this policy change, how it was drafted, right? So we had income tax, value-added tax, then the economic service charge, then the nation building tax. But as promised by the HE, those two taxes, that means the ESC and the NBT, as you said, already abolished. Now only two taxes are there. So we'll see the two taxes. What are the taxes? That mean income tax and the value-added tax. Prior to the change, the BPO sector and the business process outsourcing and the knowledge process outsourcing sector, given a 14% income tax, concessional income tax rate on their profit.
Okay.
Also given an additional 35% deduction of that industry salary to their employees
Yes.
as an incentive. That incentive is still remaining. That is not changed. In addition to that, what the proposed tax change is to exempt all the profit from that sector to zero, and if you take the value-added tax, the value-added tax was exempted here and there prior to this change. Specifically, if it is locally developed software, then that was exempted from that. Still, that exemption is there. Then the IT hardware, import of IT hardware or supply of IT hardware also given exemption. Then accessories, that also exempted from the VAT. Now, is these three other items to be exempted from the industry? That is the question. There are some other services linked. So the present proposal is to exempt the whole thing which is connected to that industry and is essential to that industry. And also any business model which is centered on that industry, all right, that also going to be not exempting that particular business, but the platform what you are providing by the sector, right? By that the company earns some income. That is to be going to exempt from the VAT. That is the apart from the previous policy is additionally given.
I see.
Now, as you said, it is not specifically stated what are the sectors, what are the items exempt, because that yet to be published by the Ministry of Finance through a Gazette notification, the particular services. So, by that you will get the specific item of the exemption. But in addition to that, if you put up an IT related entity, we need lot of investment. For that investment also, at the time of expenditure or putting up the investment, you have to make payment of VAT by way of input at the time of purchasing materials or raw materials for that purpose. And when you are getting services from the third party also, you have to pay VAT. For an example, we'll say you have already put up a IT business for which you are hiring a security services from the third party. So at the time of making the payment to that security service, you have to pay VAT.
To the security company.
Security company. Because they should
They'll
collect
charge you,
from this company and they have to make the payment to the IRD.
That's right.
So there are indirect expenses and also the direct expenses apart from these items I referred already. So the area of exemption is expanded now. So I think that will come by a Gazette notification by which you can enjoy all the exemption.
So Abba, just quick question from you. Are you happy with these concessions at the moment? I mean, it's basically everything is exempt. There are a few areas probably we'll go into. Like he said, the VAT issue, that is a problem when you're exempt. He'll highlight that next.
Of course, yes.
For the moment, are you happy with
Of course, I think hearing what Mr. Nafeel had to say with regards to the upcoming Gazette notifications, I think it would be a great motivation for not the industry. It would actually also be a great motivation for this whole drive of making our nation and our economy, digital. That is the whole objective. So the minute that you have got some form of competitive investment opportunity, and the investment that you're going to be making on digitalizing your infrastructure becomes more cost effective, it becomes more appealing to anyone. And that is the whole benefit of making all these tax exemptions. And it's not for the industry. I mean, as much as okay, the industry is going to be benefited from it, it's actually getting more and more institutions, be it private institutions, be it public sector, be it anyone, moving them towards digital, making sure that they have the digital infrastructure in place, making sure that they have the digital services that they consume, or digital solutions that they consume, digital software that they consume, coming to them at a cost effective rate. And the more that they, so we have to look at this digital element not as an expense, but as a really one of the most critical investment decisions for any infrastructure or any entity in Sri Lanka. Because if they make that, their productivity and efficiency is going to increase. So we are hoping through a strong digital economy, we can actually have a 2% growth in GDP over and above whatever the expected growth. So that's 2% year on year. So if we were looking at 6% to 8% growth in GDP economy, we can boost that up to 10% by way of a strong digital economy where everyone is using digital to improve their productivity and efficiency.
Overall, you're saying, right?
Overall, yes. Overall, I'm talking about, let's say, agriculture sector.
That's right.
In using digital to make sure that their agriculture, their productivity and efficiency increases. Whether it be healthcare, improving the efficiency of healthcare through digitization. Every single element of this, like Mr. Nafil mentioned, even the government sector, even the inland revenue has benefited. I would say, I'm sure that they would have benefited at least 10 to 20% by way of digitization in terms of productivity and efficiency. So this is exactly where we are getting to. And I believe that there are at the moment certain areas still not addressed. For example, one good example is networking infrastructure is absolutely vital for this whole digitalization element, which is not VAT exempted as far as what it currently stands at. So I believe that what Mr. Nafil mentioned, as per the current gazette, all those issues will be addressed, and those would probably help in terms of moving forward. And I believe VAT is also a key element that we make sure that it remains as exempt, because that then is an additional burden on most companies. Sure. Especially the burden comes in not for the large companies, but for the SMEs who we want to also digitize, and we want to make sure they are using some component of digital, right. And they have devices, they have connectivity, etc. As to make sure even the small manufacturers, small and medium scale manufacturers. So we want to make sure they all digitize. We are having as FITIS, we are having a road show through all the chambers in the region. That's the upcoming plan. Unfortunately, it has been brought back by COVID. But we want to go into regions, and we want to show all these SMEs and all these entrepreneurs in the regions on how they should be using digital to improve their productivity, efficiency, as well as preparing them to go global. Right. Most of them can take their products global, but they can only do it using digital. There is no other way. Sure. It's just too costly to go through by traditional means. So the only way to go global is using digital channels. For that, they need to have the infrastructure in place to be able to do that. And that is where all these tax exemptions come into play, the benefits of it. So that's why we encourage that some of these areas are yet to be addressed, if it could be addressed.
Yeah. So Mr. Nafil, there is some confusion on this VAT exemption, right? There is, although you say it's VAT exempt, there is a bit of a downside, like you mentioned earlier. So I'd like you to enlighten the audience on what, if you are liable, what does it mean for VAT? And if you're exempt, what does it mean for VAT? So that they can get an idea of whether what is the disadvantages of a VAT exemption.
Yeah, it's a good question, Mr. Sulaiman. Now we have to understand how the VAT operates. So principally, VAT is there is a two dimension. One is a credit invoice method of VAT. Other one is the value addition method. In Sri Lanka, mostly we are applying the credit invoice method or subtraction method. That means when you are taking a service from a person, you have to make the payment to him. With that payment, you have to make the payment of VAT also along with your service charge. Then the recipient of the money or the service provider will pay the VAT to the IRT. So what you will do is, you invoice from your customer with VAT and you will collect the total VAT. Whatever the VAT paid to your service provider,
Yes.
that will be credited. That is called credit invoice method.
Yeah.
Technically, if we exempt VAT, that means on your service supply that is exempted. So ultimate service supply, you are the service supply. That is the IT services. But your input services could be there, not definitely be a IT related services, but it is, as I said in my previous example, it may be a security service.
Yes.
But that is not directly connected to the IT industry.
That's right.
But everybody will use the security service, right? So in that sense, the security firm is liable to pay VAT on their service. So what they will do, they will charge from you the VAT. So it is, if you are exempted from the VAT, you are barred to collect VAT from the others.
That's right.
But you are compelled to pay VAT
That's
to
right.
your service provider.
That's right.
That is the issue is here. So if we exempt the VAT on the supply of service, IT service, there is a question of what about the service what you are consuming for this purpose, for which other parties are collecting the VAT or charging the VAT. That means they won't explicitly won't put the VAT amount, but they will include that VAT cost also into the price.
Correct.
So that is one part. So if we exempt the VAT, that your service will be exempted, but you are compelled to make the payment to others, the VAT. There is another method called value addition method. We are not widely practicing that one. Only for financial sectors are paying VAT. That means whatever the value addition ultimately you are getting at the end of the year or end of the period, on that only you have to pay the VAT. Whatever the service inbuilt. For an example, what is the value addition from your raw material point to the value of at the point of service provision? Some inputs, some service part, because you have to hire engineers. All right, IT engineer, you have to make the payment. That is the value addition. All right, so that is added back. Principally, as you know, in the case of finance sector, that is the cost of labor is added back with the profit of the entrepreneur. For that, they have to make the VAT payment. If it is exempt that point, that sort of VAT we don't have, right? So this is the issue. And the other thing is, when you are setting up of the IT industry entity, then you have a huge investment cost. Even you have to hire get a building for rent, or you have to put a building your own cost. So when you are putting a building, it will be put up with the VAT cost.
Yes. Which you can't claim if you are exempt.
That is a problem. Yes. You can't claim it. Then you may purchase IT related hardware. That is exempted. Okay, fine. But if you buy some other things for your office, for an example, you need refrigerator, for an example.
Or furniture, yeah.
Furniture. Right? You have to pay VAT for that. So that is what the people, part of the industry people wants VAT retained.
Yeah. Yeah. Correct.
That is the confusion. So in the cost involved within the investment, they have no place to claim that VAT.
Correct. So just to elaborate on Mr. Nafil's point, I think you clarified it very well, is that the VAT exemption could be tricky depending on your inputs, right? So if you're a software developer and you have a lot of employment expense, then your VAT inputs will be much less.
Yes.
And it won't hit you so much. But if your VAT inputs are big, then it becomes part of your cost of sales, and that will of course come into your selling price. You'll have to factor that into your selling price. Your selling price will go up by that amount, but it won't go up by 8%, which the VAT was. It may be slightly less. So your selling price may be more competitive. However, your customer can't claim it, right? Whereas if you are liable, your customer can. So that is the sort of tricky working that we have with a VAT exemption. So Abbas, just
Yeah,
coming to
so-
you, from a practical point of view, there are various, when to IT and IT enabled, the exemption is for all. So all have different sort of business models and where the inputs, how much you outsource, how much you employ. So in that context, do you think this will be feasible or?
So, Sulaiman, I think this is a very pertinent subject and has been discussed a lot within the industry as well. So, I think what needs Mr. Nafil brought up, he explained it perfectly in terms of what exactly the issue is. So, on an industry point of view, the thought process in the industry is that one, we need to look at the bigger picture, right? So, yes, I don't think it hits the customer. Frankly speaking, I don't think if someone has output VAT, I don't think it hits the customer, it hits the company, where they actually have certain costs, where the costs actually go up, and those are not direct costs, those are indirect costs.
Right.
So therefore, it won't actually hit the customer in any sense. Now, if you were to incorporate VAT, that would hit the customer, because the customer's purchase price would go up, and then it would be dependent on whether the customer can claim VAT or not.
Yeah.
Now, in the bigger picture, we are looking at seeing how we can, even the theme this time is digital inclusiveness, and how we can get more, digital enablement out there, right? Increasing the cost by 8% or whatever is not going to help that cause. So I think in some sense the industry also understands that they need to bite the bullet. Maybe, and the good thing about it is most of the industry, it is the labor component which is the vast majority.
That's
Right? So therefore the actual costs of other components on a long picture, maybe at the initial stage it would be a real burden when you're putting up your infrastructure. But after that, on a monthly OPEX point of view, it's comparatively nothing, because your labor cost takes up a vast majority of your overheads. So in that sense, it really is not really a big issue. It's just a small hindrance. But if you look at the bigger picture as an industry, right, that company taking that hit of that opportunity of claiming the, it would be the input VAT, or it would be the output VAT. Input VAT would be negligible compared to what the whole economy would be affected in terms of having the whole cost of digital going up by 8%. So I think the industry of that point is out, at least within Federation of IT Industry, what we have agreed upon is we would like to see the bigger picture and make sure that the VAT is not included, because we want to increase our level of digital products and services into the economy a lot more, and this would be a hindrance. So let the companies bite the bullet, so to speak. Let them take that input VAT that they cannot claim. Let them take it. It's not a direct cost. It's an indirect cost. Let them take it. That's the thought process.
So we'll move to, I think, digital tax. But just before that, Mr. Nafil, so on this framework of IT and IT-enabled services, there is no clarity at the moment.
Yes.
Right. So the next area that we'll be moving to is global trends in taxing digital. So that is basically, whether a digital tax should be imposed or not. So currently, why it is of relevance is the current taxing model, or the current taxing principles work on taxing someone. If you take Sri Lanka, if they are in Sri Lanka, so they have to have a business presence here, or they have to have people on the ground or stocks sold in Sri Lanka. Then only the current model of taxation works. So if let's assume a foreigner comes and does some services here, they will pay taxes here, and under the international tax system, that same income, if it's taxed in another country, they will get credit for the taxes paid in Sri Lanka. Therefore, there is a avoidance of double taxation concept, which has been working very smoothly over the past so many decades. But now with digital, a lot of companies can earn profits from Sri Lankan consumers, but not come here, not have a physical presence at all. So there is no opportunity to tax. Plus, the Sri Lankan businesses are also losing that business. So if I order something on Amazon, for example, I will not go to Cargill's and buy it. So Cargill loses revenue and tax is reduced, whereas Amazon makes the money and pays no tax in Sri Lanka. So that is the basic concept of it. Now the question is, even if Amazon did pay tax and we did have a method of taxing Amazon, there is no concept where they can get double taxation relief in the other country because the system is not really made. So there is a lot of discussion going on globally under the OECD to come up with equitable system and a method of taxing digital at the moment. Until that consensus is reached, a lot of countries have gone out of their way and sort of very arbitrarily or without global consensus have implemented a digital tax, right? So a digital tax is basically a tax on the importation of services primarily accessible digitally, right? Its coverage is consumers of a territory. So it's not whether you come and do business. If you are targeting consumers of a particular territory, then there is an imposition that will be brought in. And the tax base is the revenue generated from that territory, right? So that is the concept of it, and a lot of countries have now implemented it, where those companies have to now register if they are above a certain threshold, and a percentage of their revenue is taxed in those countries. They have to register and self-assess themselves and pay the tax and also file a return. So we don't have that in Sri Lanka at the moment. But there is contemplation of whether this should be or whether it shouldn't be brought in to Sri Lanka at all. So other countries have gone into it because they see significant revenue and that these companies are making significant profits from these particular jurisdictions. So just to move on to the discussion, Mr. Nafil, so I did mention, but if you can just go into the traditional method of taxation and how does this not capture digital services, for example?
Yeah, now we are talking about the zero rate tax policy
Yes.
on this industry.
Yes.
But in contrary, we are coming to the point of that there should be some sort of tax because we have to protect our domestic industry of this sector.
That's right. And other sectors also that
Other sector as well, right? Primarily this sector.
Yeah.
So now there are countries already introduced a digital service tax. Even in India, they have introduced equalization levy. Initially they put 6%, later on they reduced to 2%.
Right.
Right? We are also in the same line, in 2019, under the Finance Act, there was a special tax introduced called Commercial Transaction Levy. That is not only on the digital sector, but it says, the content says, any payment made outside Sri Lanka using their cards, either it could be a credit card or debit card or value card, any card, right? Using that card, if they remit the money, that should be subject to a tax of 7%, right? Right? That law was passed, but if it is passed, that's yet to be initiated or issued by a gazette notification to make it operative by the Minister of Finance. So that was the policy of the last government. This government is, since it's relaxed all the taxes of this industry, they are a little bit hesitate to put implement that tax at this stage. But even after few years, it could be introduced and be operative. That is what I hope.
Yeah. So Abbas, from a Sri Lankan digital industry point of view, do you think it's recommended to impose taxation on especially foreign digital services, service providers in Sri Lanka, as they currently don't pay tax on the current model of taxation, sometimes at the expense of local digital service providers?
So Sulaiman, it's actually quite a dilemma, right? It's not about the tax per se, but it's quite a dilemma because if you take the industry, FITIS Federation, we've got two core mandates. One being to see how we could actually, develop a strong digital entrepreneurship ecosystem in Sri Lanka, right? And the other one being how do we encourage the drive or the thriving digital economy. Now, you can't sometimes, and this situation, you're actually in some sense maybe affecting the second mandate by trying to protect the first mandate of the digital. So it's quite a dilemma. But I think what's important here is that we need to understand the underlying cause of why this digital taxation has been a point of discussion over time. I think that the reason behind that is purely to do with making sure that we give because there's a lot of these digital platforms and services are not going to decrease, they're going to increase day by day, and somewhere down the line you could say 40 to 50% of all services being digital in some sense. Like we've got the ride hailing apps, we've got so many other different services moving to platforms. Like that it could increase day by day. Even it could increase in terms of you going into a gig economy where all the resources that actually are recruited for small projects most of the time are actually on platforms, right? So now you don't want to lose a lot of currency outflow also to the economy, to the nation. So the challenge is going to be, of course, that you need to give our local platforms a fighting chance. You need to make sure that the playing field is level. So is digital tax the way to go, or is there a better way? I'm yet to find the answer to that, right? But the requirement is we need to ensure that there is a level playing field. You've got on one side, you've got the big brothers, the big players coming in and having the financial clout, having the economies of scale to dictate terms and putting out local platforms out of the picture, which we don't want to have, because we need to have a healthy level of local platforms so that they thrive, the startup ecosystem thrives, as well as we don't lose too much foreign exchange revenue. Right? On the other end, you don't want to totally block them either, because then your digital economy element is not going to move forward. The agenda for digital economy is not going to move forward. So the question is it the digital tax, or can the digital tax be structured in a way to make sure that that the local or maybe you give exemptions to certain companies where they are not directly affecting the local industry,
right, with some conditions,
with some conditions. Maybe that may be one option, or maybe there may be some other conditions to make sure that the playing field is level, and there is at least opportunity for, let's say, someone to start up a new platform. For example, if you take advertising expenditure today, I would say billions of rupees of advertising expenditure which used to go to advertising companies in Sri Lanka today have moved to digital platforms, right? Digital services, and that money is not even seen in Sri Lanka, and it's all going outside, right? So in that manner, how do we, if we don't have an alternative in Sri Lanka, that's fine. We need to take that move. But if we do have, how do we make sure we help them thrive without actually ensuring that these big players cannot bury them, and to make sure that we as an economy help them thrive. So is digital tax the way to do it, or is there any other means to do it, is yet up for discussion. But if digital tax is, I think we need to really look at it properly and make sure to structure it in a way where it actually addresses the concern and not maybe a kind of a blanket system in place.
So more deliberation is required of all stakeholders, right? So I think both of you have covered that section very well. I think all the questions were kind of answered. But so just moving on to, because we have only 2 minutes to go, moving on to this new concession given under the SDP law. If you're over $10 million for an investor to come in, whether local or foreign, and to grant them tax holiday and other concessions. So Mr. Nafil, if you can just tell us what is this significance of SDP very quickly, and what does an investor get?
Yeah, in fact, the SDP subjects beyond the IRD control, it falls to the BOI. They are the one, because they have to enter into the agreement with the BOI, the entity.
That's right.
So if they enter into that agreement, they will income tax exemption for a number of years, at least 10-15 years. So I don't, how long, we can't expect this sort of exemption what is given to the IT industry for 10 years.
That's right.
It can maybe for
stopped,
2 or 3 or 5 years. Then thereafter, if it is in a SDP, you will get more than 10-15 years. Then your dividend income against the who investors, they are the investors, will be exempted from the income tax. Then there is no any withholding tax, and other some at the custom point level taxes, nothing, and also the EDB tax, cess, also not applicable.
And the VAT, the input VAT also will not be there.
Yes, because for the project especially, no need to pay what I said, but we raised.
That's right. That exemption is not there. So that's only for this huge
you will get
investments.
Real zero exemption you will get if you go under SDP.
So Abbas, just coming to you very quickly, do you think this kind of thing will attract investment? Is this sufficient?
I think it will. I think I'm not too sure whether it will attract investments because there are other variables that need to be addressed as well. Like for example, ease of doing business index has to improve.
Correct.
Our labor laws have to be amended to suit the today's world.
Sure.
Those things have to be done, and that's where you will attract these big players.
So that is
But-
more important, you're saying,
but
than just
taxation
this?
is also an important element, but I think those are more important than
Right,
the taxation element of it.
right.
And frankly speaking, it's not a bad thought process actually giving these benefits and getting these big people in. There's big investments. There's opportunities for employment for the people.
yeah.
Those elements, of course, are greatly beneficial. But then we need to make sure that the underlying infrastructure is in place. The underlying effort to make sure that those resources required by those companies are in place, that needs to be addressed. So the biggest hindrance sometimes for IT sector companies to come up and set up in Sri Lanka is maybe not in the lack of
Yeah.
employable people.
Correct.
So if that's not addressed, however many,
you
whatever
give it some
exemption you give might not really be worthwhile. So it's good. It's good as one factor, but in itself alone, it will not achieve the objective. You may need many sessions.
Right. So thank you, Abbas, and thank you, Mr. Nafir. It was very useful session. I think we covered most of it in the short time we had. So thank you once again for your contribution, and we thank you for being in touch with this session.